on 4.2 work together here. And then after going through the notes, you probably saw that it's not as involved as the other one. This is more like an income statement type assignment that we're going to be filling out from last semester, if you were, or last year. We call it departmental margin statement for both departments, kitchen and then for bath, I believe. Yep. Okay. In here, you'll have to figure out sales, and we'll get that from our previous numbers. A lot of it is the numbers we already got. That's two contra accounts. We'll add up and subtract. We'll take purchases, take its two contra accounts, add them up, subtract. We'll get numbers from manipulating those. We'll add up our direct expenses that we talked about for that department, and we'll get the department margin. And we'll divide all those vertical analysis ratios that we talked about, our component percentage, and we'll have 100% here for net sales, and we'll go on. Okay. It says click here to view the instructions again. You see that, hopefully, you see the instruction sheet says, again, we're Foley's, kitchen and bath. We need to use the adjusted worksheet from 4.1, trial balance, excuse me. That's what we used to do for a worksheet. To complete this, we want to prepare a department margin statement for each department, which is this, and then we want to calculate the vertical analysis ratios of cost merchandise sold, and they show you what those are, where to put them. But we're not going to have this up. It says to use the 401 work together as our guide, so we will try that as best we can. And so first things first, we need to find sales. So we go through, but it's not just sales. Once you get to the adjusted trial balance, it's kitchen sales. So once we get to the income statement ones, there we go. Sales kitchen. So we'll put in there 417,953.07. Getting that from there. The two contra accounts to sales is the sales discount and the sales returns. These are just everyday part of business. People return things. We add these two up and we get a number. Okay. And it's 14,290.04. So this is how much sales we had. This is how much was returned and discounted. So we subtract the two to get our total, which is really what we call net sales. And we're dividing everything by sales. So that's our component percentage. Our vertical analysis ratio is 100%. Okay? Because sales divided by sales is 1 divided by 1, right? All right. So now we got to figure out the cost of merchandise sold. And cost of merchandise sold is from our, where do we get that again? Let's see. It's 140. I can't remember where we got it. January. Oh, this is from our ledger. Cost of merchandise sold, kitchen, merchandise. Sorry, we'll get there. So many screens. All right, so this is our beginning number, 140,890. So 140,890 even, yep. Okay, that's our merchandise at the beginning, even though it says 34th, that's what we had before we adjusted anything. Then we got to go, and I believe we got purchases on here somewhere. I gotta be going down, sorry. There we go. Purchases kitchen, geez. 204,164.91. So that is all the purchases we made. Now we have the contra accounts. Purchases discount and purchases returns allowance. Make sure you use the kitchen ones. So we have 2,505.71. Oop, that's too many. 2,505, sorry. Losing it here. All right, purchase returns and allowances. which again, kitchen. So we go ahead and put that 4,925.52 in. We add up the two contra accounts to get a total, which is 7,431.23. So we have all our purchases minus all the discounts and returns and allowances, and we get 196,733.68, and that is net purchases. Should feel very similar to net sales. Take the main controlling account minus the two contra accounts, and you get the net sales. We did the same for purchases and got net purchases. All right. So we take all the merchandise we had at the beginning plus all the merchandises that we purchased. So we add those two numbers up, and we get 337,623.68. Okay, so that is these two added up. We then have less merchandise inventory at the end of the year. So, oh, I might be in here. Where are we at? Well, I just always used to go up here. So go to merchandise inventory, and we are dealing with kitchen, right? 147.84. So this is our ending inventory, which means that's how much we still have, right? So if this is how many hats we had at the beginning of the year, this is how many we purchased, this is how much we had to sell, this is how much we had left over. So our cost of merchandise sold is subtracting these two, 147 from that, we get 190,539.06. We take our net sales from the cost of merchandise sold to get our gross profit, 97. Take net sales minus cost of merchandise sold to get gross profit. Then we go ahead and we get to our direct expenses, which we gotta find, or did I pass them here? Because we're gonna get advertising expense. There we go. Advertising expense kitchen is gonna be one of them, and there's not many of them. Payroll tax expense kitchen and salary expense. So we list those three. Can you highlight them? No, that would have been nice. So we list 11,900 for advertising. Payroll 5,193.25. We had the payroll tax expense, and then we had some salary expense of 59,121.95. Okay. So total direct expenses is adding those three numbers up. We get 76,215.20. Can't get over that. All right. So then we take those two numbers, our cost that we had, our gross profit, excuse me, took the cost of merchandise sold minus net sales to get gross profit. Take gross profit minus our direct expenses for the kitchen department, and we get our department margin, 136,908.77. Then it tells you to divide all these by net sales. So this number is going to be divided by all of these. So when you go ahead and you're punching those numbers in, you go 195.3906 divided by net sales, and you get this number. And then they would decide if that is an acceptable range, if it's improved range, if it's not acceptable, base it on current years, past years, however you'd want to do it. Dividing this by net sales, this by net sales to get these component percentages, or vertical analysis is 33.9 for our last one. Round to a nearest tenth when you're doing that. Okay, that is how we're going to do those department margin statements. Now, if you're looking at it, then they'd ask you to do the bath. I'm not going to walk through the bath. It's the same as walking through here. It's all the same numbers. You get them all from here. You just got to make sure that you use kitchen for kitchen and bath for bath. Thanks.